wonderful good evening here at that beautiful Dolder Grand Hotel, again in Zurich. And it feels a little bit like coming home. This is just what some people said to me. It's like a big family, familiar faces, great companies, and a wonderful setup here by the hotel. Thanks for joining us tonight. For those who don't know me, my name is Jochen Staiger. I am the founder and CEO of Swiss Resource Capital AG and also the founder and chief editor of Commodity TV and Rohstoff TV. Before we start, I think we should give a big hand for Andrew and Patrick Michaels to say thank you for putting this again together. Our main sponsors tonight of that evening are Agnico Eagle, second largest gold producer by market cap today in the world. Congratulations on that. Then we have Triple Flag Precious Metals and Alamos Gold. And I will go into more detail when before we start with the panel discussion. And after the panel discussion, we will then listen to John Reed, whom most of you know also, who is the Chief Market Strategist of the World Gold Council. And of course, he will share hopefully some good insights about gold. And honestly, I see a lot of faces here, but guys, smile. All-time high in gold. Hello, $2,365. And you know what the reason is? I wear since 9 years those green pants. That's the reason. I knew one day I will be right. Yeah, so, but also we have some table sponsors, and I want to highlight them shortly in alphabetical order that we do not get any stress here. First of all, we have First Majestic Silver with Keith Neumeyer. They own 3 producing silver and gold mines in Mexico as well. They run its own silver mint for coins and bars by the name of First Mint. And honestly, I purchased also some stuff during the PDAC. Beautiful stuff, I can tell you. First Mining Gold with Dan Wilton. They developed the Springpole Gold Project in northwestern Ontario and the Dupaquet Gold Project in Quebec. Maybe one of the last big ones which are for sale. First Nordic Metals with Tash Singh. The newly merged company holds 2 district-scale license positions in Finland and Sweden, including the Barsele Gold Project in joint venture with Agnico Eagle. Then we have IM Gold with Renaud Adams. This is an intermediate gold producer with mines in North America and West Africa. The company has just poured the first gold bar at the Côté mine, which is aiming to become Canada's 3rd largest gold mine. Great company. Then we have Kappa Gold with Dave Paxton. Kappa Gold is exploring the historic and well-known project of their 100% owned previous producing Blackhawk gold mine surrounding the areas in Southern California. Then we have Matador Mining, Sam Patsuki. Matador Mining is systematically exploring its significant land package of 120 kilometers, continuous strike lengths in Newfoundland in Canada. They already have a high-grade shallow mineral resource, and their experienced team is backed by B2 Gold as a strategic investor. Then we have Redmond Gold with Rob Bergman. With over 40,000 acres of mineral rights spread across 2 main camps, the company is well positioned to pursue true district-scale opportunities in Wyoming in the US, similar to the world-renowned Abitibi district in Quebec in Canada. So those are our sponsors. As said, for the main sponsors, I will say something later on. But I allowed myself, as I know some of you always like to get some insights into markets. And of course, gold and silver is the key. It is the place really to be in. Silver has not yet performed like gold, but I have a very, very good feeling that this will follow very, very soon. What you see here, this is an excerpt from the LBMA in London. Those are the storages of gold and silver. And what is really of interest is, look at this here. This is 2 years exactly. 1.2 billion ounces of silver in the vaults. Oops, today it is, that's a bit funny here. Today this is 814 million ounces only. Ladies and gentlemen, silver is in the 6th consecutive year of a deficit. And this was always the start of a new paradigm. Some of you might remember 2003, 2004. Same thing. 2004, silver was the 6th consecutive year in a deficit. And what happened? It went up 5 times. So it is possible that it happens again. We never know. History tends that to repeat. If I look at my charts, honestly, my long-term target is $114. But what is driving silver? The thing is really physical demand. In the first 9 weeks this year, the COMEX lost 1,201 tons of silver. They did absolutely not expect that. And it looks to me like, because I always was a bull on that, I said, finally, you need the metal. You need the physical product when you want to produce solar panels, electric cars, combustion engine cars, electronics. Without the metal, nothing happens. And here we are, deficit, 6 years. Again this year, probably 180 to 190 million ounces. From where is this coming? Of course, we can kill the walls of JP Morgan in New York. They have 1.3 billion ounces stored, but I'm sure they wouldn't allow us to do that. But the thing is, it is getting interesting also with the COMEX. Why? Look at this here. This is COMEX gold, yeah, going down. This is a little bit tricky here, to be honest. I make it different. The green line is the eligible gold, and the other one is registered. So what does that mean? The eligible gold is not for delivery from the COMEX. The owners have not yet said, yes, you can do that. Only the registered material is for delivery. So I would say it's not a large discrepancy, but what we see is that it goes down from 20 million ounces in the vault here to approximately 10 million ounces in the gold space. But look at this. This is silver at COMEX. Same game. But the eligible is still at approximately 250 million ounces, but not for delivery. And the possible delivery is down from 150 million down to 50 million ounces. So you see the dilemma. They are dry. And I used to say in several speeches this year, it is like when we change the diapers of my grandson, new diapers, and then you have the powder. This is how dry it's going to be in the vaults. So we're going to see what happens. But interesting is also to have a look at the charts. And no worries, that's not Schiffe versenken. You know that I'm doing since 42 years point and figure charts. I'm one of maybe 100, 200 people in Europe who are still doing that. The thing is, we are trend followers. We are looking at long-term movements. And it looks like that we are preparing here for a paradigm shift. What you see here with the green up, this already has corrected a little bit intraday. Now we are once again up. It looks for me a little bit like a hockey stick. But if I go to the formations with the buy signal out of December 2023 and now the buy signal in March 2024, I think the 2,430, which we have almost reached, is very, very likely. Then the next one will be 2,550. I'm absolutely sure we will see that this year. I wouldn't confuse you too much. If I take longer-term charts, I can do this with 40, 50 years. You come out here really on price targets, which are 2,780 up to 3,250. The super long-term target, believe it or not, I derived it out of a 50-year-old chart, will be 8,400. Let's see what happens. Maybe we have to do the grocery shopping with guns. I don't know, but we will see what is going on. The thing is, we are riding history. This is a paradigm shift. The markets have completely changed. Nominal, we have an all-time high. In real prices, we do not. Why? If you extrapolate the inflation from February 1980, where gold was $850, to today, and even if we use only 3% inflation rate, then we should be already approximately at $2,850. So still room to grow. And I have a very, very good feeling that this will definitely happen. Let's have a look at silver. That looks also very interesting because we have a barrier at $30 approximately, 29 to 30. The breakout level, funny enough, is $32. If $32 happen, there is no handbrake. Then it really will move. But funny enough, if you see the buy signal from December 2023, the price target is exactly the breakout level of $32. So we are today now at 28.40, 28.50. Honestly, I couldn't adjust that fast the charts, how it is rising. But I think with the supply and demand case, with the deficit what we have, and I've done a lot of interviews with silver producers in the last 6 to 9 months, and honestly, everybody told me the same. We have no idea from where the silver should come for all those technical appliances for the solar industry, for automotive. Just to give you an idea, by 2025, if we take the normal solar prognosis production and the automotive production, even if the electric cars are going down a little bit, we will use approximately 300 to 350 million ounces silver per annum. Funny enough, that's exactly the production of all primary silver producers in the world. The rest comes from secondary and then from scrap. The latest prognosis is for this year approximately 1,050,000 ounces, maybe 1,100,000 ounces production, but the demand shall be at 1.2 billion ounces at least. Those are the markets we love. Those are the markets we like, because supply, demand, not speculation, not driven by fancy future traders, by little young kids, 25 years old, sitting in the bank tower with their joystick, moving some futures along, and making some money. Oh yes, I'm cool, great, I did it. No, this is real, and this world is growing by 95 million people every year. So we will need a lot of more resources, a lot of more commodities, and it's more and more and harder to really get them. First of all, you need to find them, and then you have to develop them, and then you have to mine them. And I think there are enough companies here in the room which can tell you 10 years is nothing, or even 15 years. So from that perspective, I think we are in front of golden times, also silver times, probably uranium, also copper, that's also for sure. This will be one of the next metals really going through the roof. And I think we are ready for the takeoff in the precious metals, in the commodity sector. And my feeling is that we have a beautiful run until the end of the decade. So make sure you have quality companies like we have tonight here. Make sure that you are at least with parts of your portfolio inside, because this is, I would call it once in a lifetime chance. Why? As said, supply, demand, deficit. This is what drives markets in the future and which is sustainable. So thank you very much. Enjoy the evening. I will be back. Thank you.